Hello everyone, and welcome back to Boss Economic World. I'm your host, the guy who reads the fine print so you don't have to, dissecting the financial circus with a scalpel in one hand and a stiff drink in the other. Today is December 10th, 2025. If you're watching this, congratulations, you survived the Great Autumn Shutdown, and your portfolio is probably holding its breath right now. We are standing at the precipice of what might be the most awkward Federal Reserve meeting in history. It's Wednesday, it's 2 p.m. in Washington soon, and the high priests of money are about to walk out onto the balcony. The consensus? They are primed to deliver a third consecutive interest rate cut. But here is the naked truth, this winning streak is about to hit a brick wall. Today, we are going to peel back the onion on why the Fed is flying blind, why Jerome Powell looks like a man trying to defuse a bomb with a pair of rusty pliers, and why the soft landing narrative might just be a fairy tale they tell investors to keep them from jumping out of windows. Let's get into it. First, let's look at the backdrop. We are putting 2025 in the rearview mirror, and what a year it has been. We've had a government shutdown that spanned all of October and bled into November. For those of you who don't speak bureaucracy, that means the guys who count the beans went home. We have a massive data blackout. The ripple effects of that shutdown mean that Jerome Powell does not have the one thing he claims to worship, data. Official November data for the labor market? Won't see it until December 16th. Inflation data? December 18th. Today is the 10th. Do the math. The Federal Reserve is steering the U.S. economy, a $29 trillion ocean liner, through a narrow canal, in the fog, without radar. Diane Swonk, the chief economist at KPMG and a woman who usually speaks with the calm of a librarian, put it bluntly, it leaves the Fed in this position of having to walk a fine line. That is economist code for, they are guessing. Powell cannot guarantee the next move because he literally doesn't know what the numbers are. He has to walk out to that podium at 2:30 p.m. and represent a committee that is currently fighting like a bag of cats. He has to sound confident while knowing that 1 week from now, the data drop could make him look like a fool. Let's talk about the mechanism. The Fed has lowered rates twice this autumn. In total, they've shaved off 1.5 percentage points over the last 15 months. That is a significant easing cycle. But here is the billion-dollar question, where is neutral? In economic theory, the neutral rate is the magical interest rate that neither stimulates the economy nor slows it down. It's the Goldilocks zone. The problem? The hawks think we are already there. They think if we cut again, we pour gasoline on the fire. The doves think we are still suffocating the economy and need to cut more. This isn't just an academic debate, it's a religious war inside the Eccles building. If the Fed cuts today, which they likely will, and then inflation spikes next month because the neutral rate was actually higher than they thought, they lose all credibility. But if they stop cutting and the economy falls off a cliff, they get blamed for the recession. And speaking of inflation, let's look at the numbers we do have. The Fed's preferred gauge of inflation, the PCE, edged up to 2.8%. Folks, the target is 2%. Being at 2.8% after the most aggressive hiking cycle in 40 years is like running a marathon, seeing the finish line, and then tripping over your own shoelaces 100 yards away. It is almost a full percentage point above the target. And yet, consumer spending was little changed in September. The American consumer, the engine of the global economy, is tired. They are tapped out. The excess savings from the pandemic are gone, credit card delinquencies are ticking up, and the buy now, pay later bill is coming due. Then we have the corporate side. November layoff announcements fell, sure. But look at who is cutting. Amazon.com and Verizon Communications Incorporated are shedding staff. These aren't struggling startups, these are titans. When Amazon sneezes, the supply chain catches a cold. These cuts suggest that big business is preparing for a leaner 2026, regardless of what the Fed does today. So, you have sticky inflation combined with corporate belt-tightening. That smells like the early ingredients of stagflation, the economic boogeyman that keeps central bankers up at night. Now, let's get to the juicy part, the internal politics. Jerome Powell usually runs a tight ship. He likes unanimous decisions because it projects strength. But today? The consensus is shattering. Analysts are betting on as many as 3 dissents. In Fed terms, that is a full-blown mutiny. Let's look at the roster. The loyal lieutenant, New York Fed President John Williams. He's Powell's wingman. On November 21st, he calmed the markets by saying there was room for a cut in the near term. He's the reason the market is pricing in a cut today. He's the guy telling the market, don't worry, Papa Powell has got you. The hawks, Kansas City Fed President Jeff Schmidt and St. Louis Fed President Alberto Musalem. These guys are expected to vote no. They want to hold rates steady. Their argument? Look at the 2.8% inflation. Why are we cutting? Are you crazy? They are looking at the same chart as Powell but seeing a completely different reality. The ultra-dove, Fed Governor Stephen Miron. This guy is the wild card. He is expected to dissent in favor of a larger, half-point cut. He's been doing this for 2 meetings. He thinks the economy is weaker than anyone admits and that the Fed is way behind the curve. He's the guy screaming iceberg, while the band is still playing on the deck. The worried middle, Boston's Susan Collins, Chicago's Austin Goolsbee, and Governor Michael Barr. They aren't dissenting yet, but they are sweating. They have expressed deep concerns about inflation since the last meeting. So, Powell has people shouting cut more, people shouting don't cut at all, and a data blackout blinding him to the truth. As Diane Swank said, he's got to represent the spectrum of views, and that is just a much harder message to convey. Harder is an understatement. It's impossible. At 2 p.m., we get the dot plot, the chart where every Fed official puts a dot where they think rates will be in the future. Expect a mess. A Jackson Pollock painting of monetary policy. In September, the division was already clear. 8 officials wanted to stop cutting in 2026. 9 expected more cuts. Today, that division will deepen. Here is what the Boss Economic World crystal ball predicts for the projections. 1. Growth for 2025 revised up. Why? Because despite the gloom, the GDP numbers keep defying gravity. 2. Inflation outlook trimmed slightly. They have to justify the cut, so they will pretend inflation is coming down faster than it is. 3. Unemployment edging higher. They know the labor market is softening. They know the Amazon/Verizon cuts are just the tip of the spear. But the most important line in the statement will be the forward guidance. Most analysts expect the Fed to signal a pause. They will say downside risks to employment rose in recent months, but they will likely signal that after today, they are going to sit on their hands and wait for the fog to clear. We cannot talk about the economy in December 2025 without talking about the man in the White House. President Donald Trump. We are nearly a year into his second term. The relationship between the White House and the Fed is, let's call it tense. Trump wants low rates. He loves cheap money. It boosts the stock market, and he views the Dow Jones as his personal scorecard. But his policies, tariffs, tax cuts, are inherently inflationary. This puts the Fed in a vice. If they cut rates to please the market, they risk igniting the inflation that Trump's fiscal policy is fueling. And here is the kicker: Powell is a lame duck. His term expires in May 2026. That is 5 months away. The market isn't just watching Powell, they are watching who comes next. Kevin Hassett, Trump's National Economic Council director, is the front-runner. If Hassett gets the nod, the market expects a much more dovish Fed, a Fed that might prioritize growth over inflation fighting. This creates a weird dynamic. Powell wants to cement his legacy as the man who beat inflation without causing a depression. He doesn't want to hand Hassett a mess. But he also doesn't want to be bullied by the White House. Investors are watching for any smoke signals from the White House. A formal nomination for Powell's successor could come early next year, effectively turning Powell into a figurehead for his final few meetings. So, let's wrap this up and restore the full picture. 1. The cut is coming. You will likely get your 25 basis point cut today. The algobots on Wall Street will cheer for about 5 minutes. 2. The pause is next. Do not expect another cut in January. The Fed is terrified. They have cut too fast, too soon, without the data to back it up. They are going to hit the brakes. 3. The narrative is broken. The idea that the Fed is a unified body of experts is dead. They are a fractured committee guessing the weight of a pig at a county fair. 4. Cash is complicated. If you are sitting in cash, your yield is dropping. If you are in stocks, you are betting that corporate earnings can outrun 2.8% inflation and a slowing consumer. The Federal Reserve is trying to perform a pivot while walking on a tightrope covered in grease. They are cutting rates today not because the data screams for it, but because they are afraid of breaking the bond market. They are telling you inflation is elevated while cutting rates. That is cognitive dissonance. They are telling you the labor market is strong while Amazon fires thousands. That is denial. Powell's press conference today will be a masterclass in saying nothing while sounding profound. He will use words like data-dependent and balanced risks. Don't buy it. The reality is they are hoping against hope that the 1.5% in cuts they've already done won't reignite the inflation bonfire. My advice? Watch the dissenters. If we see 3 people vote against Powell today, the market is going to realize the emperor has no clothes. Volatility is back on the menu, boys and girls. Stay liquid, stay skeptical, and remember, in the world of economics, when everyone agrees, everyone is usually wrong. I'm your host at Boss Economic World. See you after the press conference.